Sam Bankman-Fried. The CEO of FTX has had the craziest years recently. He went from being nobody in 2019 to being worth over $26 billion at the age of 30. Just a year after the billionaire status, he is now facing the legal nightmare of being convicted of fraud and facing decades in prison. Despite all that, he still thinks he's totally innocent, and there might be some truth to that. Michael Lewis, the mastermind author behind movies like The Big Short and Moneyball, took up a new challenge to write his new masterpiece, Going Infinite. The book peels back layers of the famous CEO of FTX and tells the story of the rise and fall of this tycoon. Lewis spent 2 years interviewing and understanding the mind behind FTX and has some shocking things to say. Lewis states that SBF, the so-called tycoon, has been misunderstood all along and tells the public that FTX is not a Ponzi scheme at all. This is very similar to SBF's lawyers who wanted to paint the picture of him being a math nerd who didn't hire a chief risk officer and just made some bad business decisions. The same decisions which ended up costing the public about $9 billion. SBF was first arrested in December of 2022, which was about a month after FTX filed bankruptcy. Later on, in March of 2023, he pleaded not guilty to the federal charges, knowing that if he was convicted, he could be facing more than 155 years in prison. See whenever a company as big as FTX fails and the famous CEO gets accused of the downfall. Usually, we see them cutting some sort of deal to reduce their sentence. But SBF didn't do any of that, which could mean that either he was just willing to roll the dice by taking this to trial, which can be highly unpredictable, or he was confident that he will win and that he was innocent. As per Michael Lewis, SBF genuinely thinks he's innocent, and even if he had to do just 6 months of house arrest by pleading guilty, he would still say no. Granted that self-confidence is mostly a good thing, but those statements sound more ridiculous as you look into what he ended up getting convicted for. The 7 charges were made up of 2 counts of wire fraud and 5 counts of conspiracy that ranged from commodities fraud to laundering money. What makes things weird is that typically a company has a good structure of ownership made up of senior managers and department heads, but FTX was nothing like that. SBF weaved a web of companies and trading firms that were registered in countries all across the world, and all of them traded and moved money between them all the time. From loans to service agreements to investments, the strategy of confusing everyone and causing chaos was working in his favor, as his main defense was that he became successful too quickly and was over his head. He portrayed that he had no idea what to do and made bad decisions of not having good systems in place. Because of the financial confusion he created, he argued that the allegations against him lacked substantial evidence and that this whole situation was just misconceptions and people not understanding how FTX actually worked. Well, it may be difficult for him to explain, but let me make that easier for you. When he started working on Wall Street, he fell in love with trading and soon started his own trading firm called Alameda Research. He had little experience in crypto, yet he hired 20 people who also didn't have any experience in trading or crypto. He even admitted that the word research was added to the name just to avoid scrutiny and that no one's going to give you a bank account otherwise. Alameda Research made him realize that crypto was a lot like gambling, and it was better if you were the casino rather than just a random gambler. So as crypto doesn't follow the same rules as a traditional stock exchange, he was able to launch his own crypto exchange, naming it FTX. But if you open a casino, you need to make it popular, right? You need to make it the place to make money so that you attract more money in the process, making you the richest casino owner in the world. He did exactly that. He had some money with Alameda, so he moved all his trades to FTX and displayed FTX as the secret sauce behind his success. As things started to pick up, FTX started to buy his competitors and poured money into things like Super Bowl ads, naming stadiums, and celebrity endorsements. All of this while promising people that they could make higher yields if they simply moved their money to FTX. All these transactions were run through nearly 100 companies SBF owned, and that's what made it confusing. But it's a very simple Ponzi scheme, where as long as the new money kept on coming in, he could display great returns to some investors and keep acquiring more power and wealth. And for the big question of what happened to the $9 billion of people's money? Well, most of it was borrowed by SBF's firm Alameda to cover its losses, and then also went into paying for a bunch of things to make FTX popular. The bottom line is that people lost their hard-earned money, and I don't doubt that SBF truly thinks that he is innocent. Looking at his lack of ownership and immaturity in this trial, it seems like all of this was just trivial to him, as the money never seemed real. So how can he feel guilty for something that just came out and vanished in thin air? Regardless if you invested in FTX or not, this should be a real-life lesson for all of us to do our due diligence before investing. What are your thoughts on SBF's trial? Don't forget to like and subscribe, and thanks for watching.